Hi, good evening, everybody. Hi, David.
Hi, Benny.
Welcome to the show.
Yes, good to have me.
It's been a long time. Normally, I see you at conference only.
Yeah, it's been a while.
All right, guys. Welcome to Investors Copy Time tonight. We have a special guest. We have David Ng with us. I've known David actually through he's always on Bernama commentary. Especially when it comes to palm oil. He always give comments on Bernama, right? So today he's here with us, and we are really thank David for joining us, and also thank CME and CGS CIMB for bringing him here together with us to talk about the soybeans, all right? Because we always hear about palm oil, right? And today, because soybean is a competitor for palm oil, and of course, he also has direct correlation with the direction of palm oil as well. So we want to hear from him, the soybean market, how you can trade soybeans, and also how the soybean affect the palm oil prices as well, right? Okay, so before we start, I'm sure David has actually a presentation for us. He's going to basically present, and if you guys have any questions, you can type those questions in. Right, and I'll bring those questions to David to answer. All right, and if any point of time you can just during the presentation put the questions in, because we'll only answer the questions once David has finished his presentation. All right. Before we start, I'm just gonna go through our standard procedure, right? Whatever that's being shared here or discussed here is for informational and educational purposes. It's not intended as any investment advice or whatsoever. All right. So if you go through this, and if you guys like this session, please do share it with your friends, share it on your Facebook, so that others can benefit from this as well. Okay, so David, maybe you can start right now. Maybe you want to just introduce yourself a little bit to the audience. What do you do now, and what did you do previously, so that they get to know you a little bit.
Yeah, sure. Thanks, Benny. I'm just not sure whether can you hear me clearly, loud and clear?
Loud and clear.
Okay, that's good. I actually prepared a presentation slides. So I'm just going to share my screen. So Benny, could you see the slides?
Hold on, we'll get the files to bring it up. Okay, there you go.
Okay.
All right.
Okay, thanks, Benny. Yes, it's been a while since we last met. I think probably during the palm oil conference or whatnot. Yes, I think indeed, as what you have introduced myself, I'm currently a proprietary trader with a local prop firm here in Malaysia. So I do trade the local products, mainly the palm oil as well as the 𝐃𝐢𝐬𝐜𝐸 index. And I also do trade other major foreign indices like this, especially on the CME exchange. And I think just before I start, just like to thank CGS CIMB as well as CME to host this session. And obviously Equities Tracker, thank you for having me on this platform. Indeed, it's always an honor to be presenting on this platform. So I think let's just start on today's topic. I think today I'll be probably discussing on soybeans. And obviously, I think we are well familiar with palm oil. Being a Malaysian, palm oil is a very important commodity for us. So soybean is actually less well known, but hopefully today I can shed some light to the audience here today. If you are trading on a palm oil, perhaps maybe you can also consider looking into soybeans, because it has, as Benny highlighted earlier, it has some relevance to palm oil. Yeah. So as usual, disclaimer. So all the things I presented here today is purely based on educational purpose. Do consult and seek proper investment advice from your investment consultants. And any recommendations, do take it a pinch of salt. So yeah, purely on sharing purpose and educational purpose. So just a brief, these are some of the things that I've covered today. Basically, mainly to introduce to you the CME soybean futures, and also to share with you some of the fundamental dynamics of soybean. If you are trading any particular commodities, be it in palm oil or even any other commodities, sugar or wheat or corn, it's very important for you to understand the fundamental play of a particular product. So same goes for soybean. I'm just going to share with you some of the basics, fundamental dynamics that you as a trader, or even you are indeed want to go into this particular product, at least you need to take note. I also want to discuss about price seasonality, because being a trader in a commodity space, seasonality always has an impact. If you just look at palm oil, there's seasons and months where it's strong, and seasons and months that's weak. So same goes for soybean as well. And we will take on later on, and we'll just to show you and highlight to you which particular seasons which is weak, and which particular seasons which is strong in terms of prices. So price seasonality is an important factor if you are trading on the commodity space, and something for you to watch out for. So last but not least, obviously, I just have to share with you the relationship between soybean oil and palm oil. And obviously, if you're trading on palm oil, you do have to take note on soybean oil, because even though it's a byproduct, but its prices does have an influence on palm oil. So if you're trading on palm oil, it's very important for you to take note on the soybean oil prices as well. So let's just start. Now, if you just look at all this food that we have, I displayed to you, I think clearly you probably have eaten some of it. Tofu is a very common thing for Asians. The edamame, which is also another favorite food for, if you go to a Japanese restaurant, you definitely needs to order edamame. Tempeh is something which is very Indonesian thing, and it's also pretty well liked. And obviously your soy sauce. So these four foods pictures that I showed it to you, it clearly illustrates that there's only one common ingredient in all of it, which is soybean. So that brings a relevance to our topic today. Now, in majority of cases, soybean is actually mainly used for food product. Even though there's some spaces it's used for alternative energy, especially for biofuel, but majority of the main usage is still on the consumption. So just some fun facts about soybean. Soybean is actually part of the legume family. It's one of the oilseed crops. Now, 1 acre of soybean actually can produce 80 over 1,000 crayons. That's a lot of crayons. So that goes to show that soybeans, to plant soybeans, you need a lot of land. It's not so simple as a small area of land can produce a lot of soybeans. So soybeans indeed is actually we need a huge tractable land for you to plant soybeans. Now, soybean is an annual crop, which means that it's always a cycle. It takes about probably 80 to 120 days from planting to harvesting. So it's actually pretty long cycle. So if you calculate in terms of months, probably within 4 months to complete a whole planting and harvesting cycle. So that's the reason why when you trade soybean or any of the byproducts, could be the meal or could be the oil, you need to understand the planting seasons and the harvesting seasons, because this will definitely have impact on prices. So it's something for you to take note. If you are trading on this particular commodity, very important for you to take note, which season are you in? Are you in the harvesting season or are you in the planting season? Which is very crucial for your prices. So soybeans usually are planted in Northern Hemisphere. So places like US, even China, they do plant a certain amount of soybeans, India as well. But I think the still largest producer of soybean in the world is still US, followed by your Latin American, which is Brazil and Argentina. So these three countries constitute roughly about 70% of the total soybean production in the world. That's huge. So these three countries, if they collude, they can really dictate the price in the market. So now soybean is a common product because it's rich in protein, your source of protein. And yeah, so this is the common thing that you need to know about soybean. Now, in market, when you trade soybeans, there's always a byproduct. The byproduct is turned into a meal and soybean oil. Now, there's a lot of misconception whereby they think that soybean is mainly used for oil, the soybean oil. Actually, it's not. Majority of the demand for soybean is actually coming from meal. So when you crush soybeans, you get 80% meal and 20% soybean oil. So in most cases, soybean oil seems to be like a byproduct. But obviously, the prices do dictate a certain direction in terms of soybeans. because ultimately soybean meal and soybean oil is a byproduct of soybean. So if you are trading a soybean product, you need to know the byproducts, which is the soybean meal and soybean oil. Now, obviously, we heard headlines like trade war, the US-China trade tension. It is still ongoing. It is something that is giving a lot of headwinds to the market. So if you are trading on commodity space, you definitely be very careful whenever you have news flow coming from the US-China trade war. I'll touch on it later on, but just for information, again, soybeans is a major commodity for US. If you just look at in terms of total US exports to China, soybean constitute more than 50% of total US exports to China. So in other words, I think soybean is also used like a bargaining chip and also used as a trade weapon, especially when in terms of negotiation between both parties. So obviously, I think US depend a lot on China as a big buyer of US soybeans. But of late, we see those, especially from Brazil and Argentina, coming to those space and trying to take away some of the market share from US. So I think these are very concerning. But obviously, US, as we know, Trump is heading for a re-election. So let's see how the US-China trade war is going to pan out. Whether soybean could be used as another major play between both parties. Now, since we're very familiar with palm oil, so I'm just going to share with you and illustrate the different types of vegetable oils that's available in the market. So soybean oil, which is a byproduct of soybean, is also a vegetable oil. So if you look at it, I think why palm oil can command such a big market leader in the vegetable oil space is because of the yield. If you look at per hectare basis and on per production basis, palm oil is still the best productive vegetable or oilseed crops out there. Now, if you look at the next best is soybean oil, and obviously some may argue it's rapeseed, but to a certain extent, I think soybean oil command a little bit more market share in terms of the total vegetable oil market in the world. So soybean oil remain quite relevant, especially in the vegetable oil space. So if you look at it, palm oil is still the most productive oilseed out there. Therefore, it shows the relevance of palm oil as a major vegetable oil commodity in the world. But I think soybean oil is next to it. So both of these products are actually competing each other. And in fact, if you look at big buyers like India and China, they continue to be, to hold such a big relevance in terms of buying certain amount of palm oil, buying certain amount of soybean oil. So this is something for us to take note. If you are really trading in the market, you really need to know what are the developments in the palm oil space as well as the soybean oil space. So here I illustrate the two major commodities again. On the left, we have the palm oil growth cycle, and on the right, your soybean growth cycle. Now, palm oil is very unique in the sense that it's actually a perennial crop. Perennial crop meaning that once you plant it on the ground, that's it. You just need to give it water, give it nutrient, and you just leave it. You don't have to go and harvest. You just harvest the fruit. That's it. You don't have to chop down the tree. Soybean, on the other hand, is different. It's an annual crop cycle. That means if you plant it on the ground, it takes you about 4 months to your harvesting cycle. Once you harvest, after you finish harvesting, you need to replant again. So it's an annual crop cycle. So if you look at palm, the average life cycle for a palm tree will usually last about 28 to 30 years. So it's a pretty good investment. You plant a tree and it gives you fruits for the next 30 years. But the key question here is, there is a cycle where it's matured or, the productivity tend to get lesser year by year. So the first 10 years of the palm oil tree is very productive. But once it goes into the 13 or 14 year cycle, that's where the yield starts to decline. So if you are trading on, or perhaps maybe you're thinking of investing in a palm oil estates, you need to know what are your age trees profile like. If you have a very old trees age profile, don't expect your yield to be good. So that's one of the key thing, especially when you want to look into the yield or productivity of palm oil trees at particular different estates. So this is something for us to take note. Now, soybean, on the other hand, is slightly different. It's an annual crop. So it's always planted in US. It's always planted in April, where it starts planting, and it can drag on until August, September, where is your harvesting season. So those are the months where farmers will go down to their field, with their big tractors and start harvesting soybean, right until October. So probably they'll load up into their ships, send it over to China probably around October, November. So it's very crucial during this window whether is China demanding more beans. If they don't, I think prices will also tend to react. So it's important for us to understand stages and cycle, because this will coincide in when I mention on later on in terms of price seasonality. It does have an impact. So it's important for us to take note. Now, besides understanding cycle and stages, it's also important for us whenever we trade commodities like soybean to look at reports. As a trader, despite making decisions based on technical, looking at charts, sometimes it's also very important if you're trading on commodities. It's very important for us to look into reports, because these reports are indicative of your fundamentals. So if you are trading on palm oil space, you'll probably know about every month the MPOB will release an MPOB report, which is on the 10th of every month. Now, on the soybean space, there's a similar report. It's called the World Agriculture Supply Demand Estimate Report, which is also out on a monthly basis. There's a schedule for it. So it does detail what is your stocks level, what's your production level, and what's your exports demand going forward. So there's a lot of estimation and there's a lot of actual numbers. So when those reports are released, prices will move. And if you are already trading on the market, those dates are very crucial, because you can either get it the wrong way or you can get it the right way. And it's very important for us to analyze the reports, because it does tells you what are they forecasting. Are they going to forecast huge production to come, or are they going to forecast limited production, maybe due to bad weather or whatnot? So I think these reports are very important for us to gauge what are the supply and demand dynamics of soybean. So here just a sample. I think this was June's monthly report. So it goes to show, I think, based on it, soybean production quite in line with what is expected for this year. So I think the game changer will be if going forward right now to the harvesting period, is there any weather extremities? If there is, then probably you see prices tend to react. But if everything is normal, weather is normal, there's not much of extremities, I think pretty much this year we're probably going to see similar production levels like last year. So in fact, I think you don't see much increase, and it's actually quite bullish for the market. Export, on the other hand, is very crucial, because that depends on US-China trade war progress. Because if it doesn't progress well, then obviously prices will have to plunge. So I think on that front, that's something that we have to watch out for. So if you just look at the report, I think overall, last month's soybean report is actually quite mild bullish for soybeans. And in fact, I think when the report was published, you can probably see prices start increasing. So, as a trader, you just have to watch out on these monthly reports. Now, just to give you some supply dynamics. So total production, US, if you just look at US alone, as compared to the world total production, it's roughly about 30%. So US is quite a big player. But if you compare with the Latin American countries, I think US is slowly losing some of the competitiveness to Brazil and Argentina, especially Brazil. And I think really we will study in that later on as I go through the slides. But I think what's concerning is that the world total production of soybeans actually continue to increase because of demand. But I think given the COVID-19 pandemic crisis, we are likely to see that the demand will tend to remain a bit more sluggish. So that will actually impact on your stocks levels. So if you are trading on the market, do watch out on all these spaces, because this will translate into your prices ultimately. So do be very careful on all these developments. So now, trading the US soybeans, as a trader, you really need to look into a lot of reports. So firstly, I just shared with you the monthly reports, which is the World Agriculture Supply Demand Estimate reports. Secondly, we also have the planting progress reports. This is on weekly basis, which indicate that, across all the major growing areas in US, what's the progress like? Are they seeing slower progress, or are they seeing higher progress? So I think this is also very crucial. If you are trading on the market, every Monday they'll be releasing this report. If the report turns out to be bad, probably prices will react. I think just yesterday alone, I think pretty much the soybean conditions has been quite in line with that 10-year average, which indicate that probably production will be quite in line. So I think prices actually reacted to that. So planting progress is actually a critical crop report that, if you're trading on the soybean space, you need to observe. So a good planting progress will always indicate supply is actually on track. A bad progress report usually indicates there's a little stress in production, and that will actually translate to higher prices. So do watch out. You can get all these reports from either USDA. CME website has a very good content in terms of all the different reports, especially for commodities, whether it's your corn, your wheat, or soybean. So you can have a look at it. I think CME website is actually very comprehensive in terms of their reports. You can actually have a look at it. So if you are trading on this space, you do have to watch out on your weekly planting progress. Now, I think this table illustrates my point. It goes to shows, I think if you just look at it, the contribution between US, Brazil, and Argentina in terms of the total world soybean production has actually been on the rise. But I think the crux of the matter is, if you just look at the US proportion, it's actually declining. And if you just look at Brazil itself, Brazil has actually been on the rise for the past couple of years. So I think if really you are looking at it, this is quite concerning. Going forward, we are likely to see probably US will lose a bit of its competitiveness especially to Brazil. So Argentina is slowly catching up, but I think Brazil will remain a very dominant player, especially in the soybean space. So Brazil has been supplying a lot of soybeans to China because of a trade war with US. And I think Argentina is also slowly trying to increase its market share to China. And I think ultimately the biggest loser in this space is always US. So US farmers is feeling the pinch. That's why you can see prices of US soybeans has not been going up for quite some time. But in fact, I think if we just look at where prices are, it's trying to consolidate at around this level. So going forward, as we head into the election period, as we head into the second half of the year, could we see a better sentiment from the US trade-China war? If it does, I think soybean could have a positive impact in terms of prices. Okay, so that's on pretty much the supply dynamics. Now moving into the demand dynamics. So obviously we have China, the biggest buyer and purchaser of soybeans, be it from Latin America or from US. Now, I think China, the major reason they are the biggest buyer is because if you just look at the consumption of poultry, because if you look at it, soybean meal is also being used as a feedstock, and soybean oil is also mainly used as a vegetable oil. So if you look at it, I think China has been always a very big consumer in the market, given the population and given its general demand. So over the years, we have seen rising GDP, better living income standards, and I think that shows into in terms of their consumption pattern as well. So China has been demanding a lot of soybeans year-on-year basis, and if you look at the cycle itself, around mid-year, especially when you head on to July, August, September, those are the periods where China would demand a little bit more of soybean. So I would say US right now is going into a very critical period because China is going to demand a lot soybeans if it's in line with seasonal pattern. So as we go into a high buying window, whether we be buying a lot of beans from US or we be buying a lot of beans from Latin America. So I think these are some of the trade developments that we need to take note. So I think if you just look at current numbers, it looks like China still want to increase their purchases of soybean going forward, and that will actually translate into better prices. But the question is, are they buying from US or are they buying from Brazil or Argentina? So I think this is something that we have to watch out for. And I think current low price is actually an added advantage. If you look at the current US soybean prices, it's actually quite low. So that makes the US beans more competitive, in fact. Now, this is interesting. If you just compare China's soybean prices and the US soybean prices, when I say China's soybean prices, I meant China's soybean locally priced beans as compared to the US soybean prices, the futures market. Now, we can see a discrepancy here. especially if you just look at it, the China soybean prices has actually been higher price compared to the US soybean futures, which indicates that demand is getting stronger. There's recovery, given that certain cities in China has already resumed their activities post the lockdown. So we can see a lot of economic activities going on, and actually that translates into better demand. So therefore, prices actually is rising, but there's a big gap. Now, US soybeans are priced very competitive to the China beans. So in that sense, we can clearly see that China will probably be either they're going to demand a lot of US soybeans because it's actually relatively cheaper, or they will continue to buy from Brazil. Now, I don't have the chart which shows Brazil prices as well, but if you look at it, Brazil prices is actually higher than US prices right now. So this goes to indicate that I think this trade tension has actually translated into a very big price discrepancy in the soybean market. So will this discrepancy adjust? Well, perhaps, maybe, because I think eventually market will go back to normal once there's better clarity on where the trade war is going to go. So once the trade war has a better clarity, I think prices will tend to adjust, which means that the US soybean prices has actually more room for the upside rather than on the downside, because eventually I think the competitiveness of US soybean has actually been quite competitive of late. So let's see moving forward where those prices are going to go. But right now, we're clearly going to see the China soybean and even corn prices are much higher than the US prices are. So eventually both markets will tend to adjust, which actually spells more upside for the US soybean and the US corn. Now, if you look at stocks level, so China is a very big buyer for a lot of major commodities, even for palm oil as well. So if you look at some of the stocks level, now stock levels are very important for us to gauge whether that particular commodity is oversupply or undersupply in China. So once the commodity has a lot of stocks at the port, so we don't think the demand is going to be good. But vice versa, if you see that the stocks levels at the port is actually quite low, then eventually we believe that China government will start buying a lot of these commodities to stock up. So if you look at the pattern, again, look at soybean port stocks levels, again, we are quite in line with seasonal. So if you just look at it in the next couple of weeks, as we head towards the third quarter, the July, August, September period, China will usually step up their purchases for soybean markets. So it's very crucial to watch now whether are they going to buy from US or the Latin American countries. But seasonally, we are moving into a high buying window. So if you are trading a soybean market, you tend to see prices tend to be a bit more supportive going forward. So stock levels right now are quite okay. I think eventually China will start buying up and start putting a lot more beans into their port. Palm oil, on the other hand, is a bit interesting. Palm oil stocks at China right now is actually quite low. So China is, I think China recently, if you look at the numbers, they are actually buying a lot of palm oil, be it from Indonesia or Malaysia. So those stock levels are actually starting to rise. But again, you can see that the buying window is fast approaching for palm oil as well. So in the next couple of weeks, probably you could see a lot of palm oil buying activity coming from China. So this is something that is always in our mind if you're trading commodities, the trade war, especially have very big relevance to soybean. So the US-China trade war, as far as we know, we have signed the first deal back in early of the year. And I think US government is, China government is actually committed to purchase probably commodities amount of 19.5 billion, which is a huge amount. But if you just look at the progress of buying until today, we have not seen much. So it's very crucial to watch. Is Trump going to start showing its antics and trying to force China to buy more? There's something for us to watch out. But if you just look at current progress, I think China has not been buying much. Even though they have committed that this year they probably will buy 19.5 billion worth of agriculture products. But I think so far, if you just look at the current progress, probably they're only hitting about 25 to 30%. So there's still a very big window and gap for it to fulfill its commitment. So it's also crucial to watch. Now, assume China is willing to fulfill the commitment. I mean, that goes to show that soybean prices cannot stay at its current level because we're going to have a lot of demand coming in. I think this is something to watch out for. It's anyone's guess whether China will try to maintain its commitment for what it has promised in the first phase 1 trade deal. So let's see, and whether you'll remain committed to that. So I think that's pretty much the overall overview for the supply and the demand dynamics for soybean. Now, if you are trading in the soybean futures market, that's always very important for us to understand what we call the crop calendar. So the reason I say it's important is because when you are trading a futures contract, there's a lot of futures, other forward futures months that's available for you to trade. So you need to know which are the months that is particularly is a planting months or planting season for soybean, and which are the particular months is for harvesting. So if you look at the US side, especially for soybean, usually if you look at April to June, is usually the window of planting, and they will start harvesting probably towards end of September, October and November period. So prices will tend to be very volatile during this time. So like those weekly progress report which I just highlighted earlier, those reports are crucial because that will tells you whether every week when you harvest, are you expecting a bountiful crop? If you are expecting a bountiful crop, prices will adjust. But on the other hand, when you harvest during the harvesting period, if you have bad weather, a lot of farmers, they don't want to go out during a bad weather. If you have tornado coming in, definitely they can't go out to their farm and harvest. So that will spell lower supply, and that will translate to higher prices. So this is very crucial for us to gauge and assess what are the weekly developments in terms of their progress. So now we are still in the planting season for the US soybeans. As we go into a July, August period, it will be pretty much, we call it a window of gauging how the crop is going to turn out. So those particular months is very important for us to check on weather. And weather is so unpredictable. If you are trading a commodity space, it can really change the whole game. And now, Latin America is slightly different in terms of their planting season and the harvesting season. If you compare both US and Latin American countries, their planting seasons are actually coincide. It's trying to, if you look at it in totality, so you have early of the year planting season for US, which actually is the harvesting season for the Latin American countries. Now, when US side goes into the harvesting season, it will be the planting season for the Latin American countries. So all year round, there always be a supply of soybeans into the market. So China has no worries. They don't have to fall short if US go into planting period, they don't have enough beans. China can always look into the Latin American. So it's actually trying to subsidize each other markets. And clearly, I think it's pretty much an all-year-round market especially for major consumers like China. They do need such a constant supply of soybean into the market. So, in other words, there's not much of disruption to the market, but it's important for us to take note which are the planting months and which are the harvesting months for us to gauge where prices is going to go. Now, I'm not going to touch too deep on the old crop versus new crop, but this is what the market convention is. So if you are trading on the soybean space, the soybean futures in particular, or even the corn futures contract, you need to know that old crop always refers to the planting seasons. So for soybean, old crops are always refers to the January contract, the March contract, the May, July, August, and September. The new crop is always referred to the November futures contract. Same goes for corn, very similar. So corn is always March, May, July, and September as your old crop contracts. The new crop is always the December futures contract. So as a trader, you can always trade on those spreads. And again, I'm not going to touch too much on it because spread is a new category. It involves two different contracts simultaneous, and it's actually trading on the price difference. So it's slightly a bit complicated, but just for your knowledge, I think the market convention views this as periods where it's always referred as the old crop and the new crop. So traders can always trade if they have a view where the new crop is going to go. They can actually buy a spread or short a particular spread based on their view and how they see or they gauge the crop is going to turn out once they reach the end of the period. Now, if you are trading on a future space, it is very important for us to take note on what are the overall sentiment of the market is. CME futures contract has what we call a commitment of traders report. It does detail you out how many of the participants are holding short or long in the futures market. It's important for us to gauge the sentiment, because when you are trading in the commodity space, you cannot be, if you are having a bullish view when a lot of people are holding net short. Same goes vice versa. If you want to have a bearish view, but majority of people are having a net long position. So it's very important for us to gauge where the overall sentiment of the market participants are. So right now you can see that the market participants in general are very neutral. They are neither net long or net short. So total positions are close to zero. And this is just trying to tell you that the market actually has no direction for this point in time. But moving forward, as market starts to develop its trend, whether it's on the upside or its downside, start to notice and pay attention and observe. The commitment of traders report will usually indicate the net position of all these market participants. So if the trend is going to head lower, it's going to be bearish. So you can clearly see some of the commitment traders reports is going to point to more net short positions, and vice versa. If you're going to see an uptrend, probably going to see a majority of those market participants holding net long positions in the market. So this commitment of traders reports is also on a weekly basis, and it's actually very crucial for us to gauge how are the market participants behaving? Are they net long or net short? So coming to the last part of this sharing session, I think it's very important for us to look at the soybean oil and palm oil, because these two are inter-commodity spread. Now, if you are trading on palm oil, obviously you need to look at soybean oil. It's also another factor that drives prices. If you look at it, both has actually quite close relationship. It's about probably 50% if you look at historical basis. Soybean oil is actually a competing product of palm oil. So whenever you see prices rise in soybean oil, usually you will see prices rise in palm oil as well. Now, which dictate which, it all depends. There's no fixed relationship whereby one is a leader, another one is a follower. So it all depends on its respective fundamental dynamics. Soybean oil has its own fundamental, palm oil also has its own fundamental. But in terms of prices, they tend to move quite positively together. So based on relationship basis, probably it's about 45 to 50% of the time it moves together on the same direction. So there's always a market notation, and market always observe this behavior between the soybean oil and palm oil. There's a spread between these two commodities. Obviously, because both of these commodities is very similar in terms of their function, but obviously they are priced differently, and even the contracts are also very different. So there's always a spread between both commodities. Now, market participants tend to use this particular relationship to build a basis for a particular product, whether it's on the soybean oil or the palm oil. Now, if you just look at this chart, historically speaking, the average price between the palm oil and soybean oil spread should be around 100 to 150 US dollar. It's been holding there for, I think, close to 10 to 15 years. Now, can the spread go to zero or even below zero? It can, which goes to indicate that whenever the spread goes below zero or even negative territory, it just goes to show palm oil is way overpriced compared to soybean oil, or soybean oil is way undervalued. I think in those situations, a lot of what traders will do is that they tend to take the opportunity whereby to go into the palm oil market, to short the palm oil contract, and to take a long position in the soybean oil market. Now, why this behavior exists? It's always back to its fundamental dynamics. There's a fundamental development that's happening in soybean oil or even in palm oil that's causing the spread to go below zero. But if you just look at historically speaking, even though the spread goes to zero, it doesn't stay there for long. It's only probably a couple of days, then the spread goes back up to above zero and trying to revert back to its average, which is about 100 US dollars. So I think this characteristics is very important for you to take note if you are trading on the soybean oil space or even on the palm oil space as well. So the spread does go to zero, and it in fact does go below zero. But if you just look at historical average, it's about 100 to 150. Now, if you just look at the chart, again, you can also point to me that the spread does go above the historical average of about 150. I think the highest it ever been was about 400 or 450 US dollar spread. That goes to show that soybean oil prices is way overvalued, or palm oil price is underpriced. So I think this relationship does hold to a certain extent, but you cannot use this as a basis to form a particular position, because palm, like I said, you are trading on palm oil space. There's a lot other fundamental factors that can affect prices. Same goes for soybean oil as well. But soybean oil and palm oil spread has been a relationship that market has been always watching around. So those who are trading on these two commodity space, probably they have seen this spread and they probably have take a position. I think just late last year or early this year, we've seen the spread went down to below zero. It was actually quite briefly, probably between 1 or 2 days, it actually went back up to above zero. And that time goes to show that I think palm oil was actually way overpriced. I think early this year, palm oil price was doing about 3,000 ringgit. So that's so-called relationship between both particular products. So just to share a little bit on price trends, this is the soybean price trend for I think the past 2 decades. Now $8 or 800 cents is a crucial price level for a very long time. I think for the past 10 years, $8 level has actually been a very strong support. Now, a lot of people say, can it break that psychological support? It may, if trade war take a nasty turn or fundamentals take a downhill. Now, it's very crucial. If it does break the $8 level or 800 cents level, it's pretty much spelling a new downtrend for soybean market. So same goes, you also be spelling a new downtrend for soybean meal and soybean oil. So this is something for us to watch out for. But I personally believe that the $8 psychological price support will continue to hold. But very crucial to watch how this US-China trade war is going to develop. So yeah, just to share with you the seasonality. So again, here comparing prices on to month basis from January to December for the past 20 years. So green boxes just to highlight month-to-month positive, red boxes is to highlight month-to-month negative. So just want to share, if you just look at it, July, August, September is usually weak periods for soybean. So in those periods, your buyers should be a bit more on the downside. Now, if you reverse the scenario, February, March tend to be a very strong period for soybean, based on a 20 years historical data. So in those periods, probably you should take a long position if you just based on historical trend. But then again, do take note that historical may not follow, given its own fundamentals or whatever. So do take it with a pinch of salt, but take it as a brief guide. If you are trading on the soybean space, you need to know and be aware on which are the periods where it's weak and which are the periods that are strong. Palm oil, slightly different. If you look at it, June, July, August has been quite a weak period in terms of prices. Even April is not a particularly good month for CPO. But if you go into the last quarter, the October, November, December, that's where things change. So CPO tend to display a very strong prices towards the end of the year, because this is pretty much in line with production cycle. Probably you see lower production towards the end of the year, and that's where prices tend to be stronger. So now we are in CPO market, we are entering into a period where it's a bit more weaker prices. So you tend try not to have a view where it's a bit more bullish, because you are entering into a very weak period in terms of seasonality. So as we approach towards the end of the year, that's where you should see prices will start to rally, given its fundamentals. So just to share with you, these are the monthly report dates. So if you are trading on the commodity space, especially for soybean space, do take note and be very careful of these dates. This report release dates usually will have big impact on market. So futures contract specification. Now, if you are very interested to trade on this particular product, the margins are fairly okay. We look at soybean, it's only about $1,600 to trade about one lot contract. Soybean meal is about 1,000. Soybean oil is even cheaper, $770. Now, margins can change. I think do talk to �CGS Sdn representative for the latest margins. But just to highlight, I think this, in terms of the margins, are not fairly expensive, and it's actually very manageable if you want to start your trading journey, especially on the commodity space. Trading hours are slightly different. Majority of the grain products on CME, they start their time at 8 a.m. Malaysia time in the morning to 8:45 p.m. for the first session. They rest for about 45 minutes. 9:30 will start again until 2:20 a.m. in the morning. So it's actually pretty much like a 16-hour cycle a day. So it gives you a lot of leeway, a lot of trading opportunity in terms of longer timing. So these are the future contract prices. This table I extracted from CME website. So again, soybean, the July, August, September are the old crop. November is the new crop. So January 2021, March, May 2021 are those old crop contracts. So new crop contracts are November 2021. So there's traders who trade based on the spread of the old crop and new crop prices. So I don't go too deep on that, given time constraint, but just for your knowledge, if you are really looking to the soybean market. So just to end and to conclude my final point, I think agriculture products in general display more seasonality. You can clearly see some of the 20 years data that I just showed you on the CPO market and on the soybean oil market. You can clearly see the season and months where they are weak and seasons and months they are strong. So if you're trading on indices, it's slightly different story. And just goes to show that if you use the same methodology, you're trading indices and even apply it to commodities, it may not work because commodities is a total new game. So it requires a different methodology to approach it. And again, I think agriculture in general display less volatility compared to indices. So I think this is something, if you're new to the market, you need to be aware and be mindful of. So if due to low volatility, I think traders, you have to look at a higher time frame. If you are intraday traders, you can't be looking on the 5 minutes because there's not much action on 5 minutes, but you look it into an hour basis or even on a 4-hour basis, there's some action over there. And volatility only kicks in, especially during the important report dates, especially when you have a monthly report. Those dates are very crucial. So here are some resources. I know you can go back and you can do it on your own free time. Have a look at it. CME has a very good website on all agricultural reports and products, so you can have a look at it. So I think with that, if you are very keen to start your journey, especially on the soybean space, do contact 𝐶GS CIMB. He is the contact. I think probably they can even tell you what's the latest margins or even some of the products specification in detail. So with that, I'm just going to hand it over to Benny for any Q&A if you have from the audience.
All right, thank you, David, for your very, very insightful information. I guess those who are trading in the edible oil market like palm oil and soybean will definitely get a good insight, right? So let me just ask you a few questions first. While others, guys, if you have any questions, you can ask David. Now this is an opportunity for you to ask him. I do have some questions for him. But if you guys need any questions, and he's around right now, we only have like another 10 minutes left. This is a really good opportunity to actually ask him questions because you normally see him only in conferences, right? And you only see him in the newspapers. So now is a good time for you to ask questions. All right. So David, you have been trading commodities like palm oil and soybeans for quite some time now, right? How many years already?
I think in totality probably about 2 to 3 years, but looking at the market, well, probably 6 to 7 years.
Yeah, because previously before you were a prop trader, you were an analyst, isn't it?
Yes, correct.
So looking at commodities market, do you think it's as a normal investor or a normal trader, is it easier to trade commodities or indices?
Okay. Now there's always two sides of things. If you are someone new, if you're someone that you don't want to go into the nitty-gritty of trading, you just want to let's say you are a technical trader, you just want to look at charts, it tells you the buy and sell signal, you just want to enter, then I think indices will play a better part. But commodities, if you are someone that look into reports, understanding the dynamics, going into deep down and dive into a particular commodity to really understand what causes the price to increase, what causes the price to come down, then perhaps commodities could be a better option. So it actually really depends on the individual, what type of trader you are.
I guess if let's say I'm just a palm oil trader, right? Because Malaysia, we always think about palm oil futures. Do you think they should also look at soybeans? Because we mentioned about the spread between palm oil and soybeans, and there are times that there are really good opportunities if you know how to actually play with the spread, right? So do you think a palm oil trader should also be looking at soybeans?
Yes, I think they should. If you are trading on a palm oil space, you should at least look at the soybean oil space. I mean, margins aside, even though the margins are very reasonable, margins aside, if you just look at the relationship itself, when you trade palm oil, I just showed you the spread. It's actually very, I would say it's very dynamic. If you look at, historically speaking, you look at it when the spread goes into negative, it's only very brief period. And it's always point to one thing. When it goes negative, it always tells you that the palm oil prices is actually overpriced. So if you are someone who wants to capture an opportunity on that spread alone, you can actually short the palm oil market and go long into the soybean oil space, hoping that the spread will eventually goes back into positive. So you are actually catching two point of opportunity here instead of one. So that's how you should one can leverage basically on the spread itself.
And this doesn't happen all the time, isn't it? I mean, this is like once in a while it happens when the spread goes to zero or below.
Yes, correct. I think it only happens very briefly. And I think historically for the past 10 years, spread to go into negative territory probably once or twice. It tested. But, like I said, just only a few days or probably 2 or 3 days, it will go back up into positive territory again. So I think it's a very good opportunity for the traders to take.
Right. Yeah, David, you mentioned that the stocks are now low in China, right? And it's probably time for them to really start buying soybeans or probably even palm oil. Based on of course it's seasonality, right? And we know the good thing about commodities is because it's season, and when they actually sell, when the demand is actually high and when the production is low normally. But what about the effect on COVID-19 towards the demand? Do you think the demand will be as strong as the previous years?
Okay, I think this is a very good question. In fact, if you are observing the market, whether it's on the palm oil space or on the soybean oil space, I think palm oil this couple of days has actually been quite sluggish in terms of prices. I think the market sentiment is reflecting a potential second wave COVID second wave coming into China. I think we see some news that some of the cities in Beijing are starting to lock down again. That may actually hamper demand. So I think market generally is quite concerned. And in fact, they are watching closely on how demand is going to play out probably in the next couple of weeks. Especially, with this Sunny, there's a news that probably second wave may be emerging in China. So I think market is actually quite jittery in terms of how demand picture is going to play out. So crucial to watch. If you are already trading on a palm oil space, the next 2 or 3 weeks is going to be very crucial, especially on this COVID-19 development in China.
Now, I know we are talking about soybean prices, soybeans, but there's actually a question here from Tuan Chuan Boon, right? I'm sure that you also look at palm oil prices. What do you think the price range will be for palm oil in the remaining 2020, based on your own opinion?
Yeah, correct. This is just personal opinion, yeah. Wow. I mean, fundamentally, if you look at palm oil this year, I think in terms of average, probably second half, we are entering the second half. We should see better prices, especially towards the last quarter of the year, historically speaking. Now, as I think one of the audience asked a very good question, demand has not been very good this year overall because of the COVID. So second half, usually China will demand more because as they head into winter season, a few months before that or few weeks before that, they'll buy more. But the buying window is starting to emerge. So it's very crucial to China. It's very crucial for China to start, really going to the market and start buying. But if China is not buying a lot during this time, then probably you're going to have a weaker demand, and prices will not tend to rise. Now, if you want me to give an estimate in terms of price, probably I'll go with the average. So I think last year's average is about 2004, 2005. This year, I don't think we can go beyond that. Probably the average for this year, CPO price probably will stay between 2003 to 2004. That again also look at soybean oil. Soybean oil has also not been performing. It cannot even cross the 30 cents. So it's actually quite bad for the both markets. So I think on average, we can see that prices will probably be between 2003 to 2004 in terms of average this year. And probably the high we could ever see is 2006 or 2007, which is probably towards the end quarter. So this year, all in all, quite mildly bearish, because of the COVID-19. And always production is always a question mark. And it's also anybody's guess. Weather is very unpredictable. So yeah, that's pretty much sum up my view on the CPO.
Right. So yeah, it's interesting because one of the things that is really hard to predict is the weather as well, and it plays a very important effect on the prices as well. So based on your own analysis or your own, I'm sure you have your own intelligence as well, your own research. Would you expect any severe weather that may affect production this year?
Okay. I think what is more concerning in the short term from Malaysia perspective is that now a lot of, as we head into next week's MPOB report, a lot of people are saying production may be lower. Some even say production may be higher or slightly higher. Now, during this time, in terms of the CPO market, is your pretty much your period where you should see higher production. But if you don't see that, then it is something amiss. Prices will also tend to react to that. So the way I look at it, I can't predict weather. And even I look at some of the reports. Some of the weather reports saying this year weather to be normal, but things can change last minute. Assuming weather is normal, I think pretty much production should be normal. But again, very crucial next week is MPOB. Watch out on those numbers if you are already trading the palm oil market.
We have a question here actually from one of the participants, from Casey Lee. Because I think Malaysia just reduced the export tax till year end. Will it boost the CPO demand?
Wow, the audience seems to relate more of palm oil rather than soybean oil. Yeah, I think in general, the government decided to extend the zero export tax to the end of the year. It's going to help much in terms of CPO demand. But what is more concerning is that India is still suffering a little bit of lockdown. Demands continue to be weak. And they are approaching the Diwali season, which supposed to have better demand. But let's wait for those numbers. We're not going to expect much because this year is really I would say it's a very discounted year because of the COVID-19. Now the export tax definitely going to have a good impact in terms of demand. But again, I think the big buyers are not buying. In fact, if you look at India, they have actually reduced close to 70% of last year's purchase, which is a lot. So I think that's very concerning. So it's more of a demand concern right now from the big countries. So even though we have zero export tax, it's beneficial. But if there's no demand, it may not have a full effect.
Yeah. So it still boils down to the demand, right?
Correct.
Okay. So now as a trader, right? Because for those who are aspiring to be traders as well, what do you normally do? As a trader, when the moment you get into the office or the moment you start to look at the prices, what's your normally routine? What's your routine?
Oh, okay. Now there's one question, a very good question as well. Wow, I mean, as a trader, as a full-time trader, there's a lot of people say it's the best job. You get to do your own stuff, but I beg to differ, because there's a lot of preparation involved. So a normal routine just before market starts, CPO starts at 10:30. Even the soybean oil starts at 8 o'clock. So you need to start your preparation before the market opens. So imagine how early you got to wake up. So if you're trading a soybean oil space, you know you got to overnight news, 7 o'clock, you got to wake up, you got to read the news, you know, and start looking at your positions. Same goes for CPO. You also need to start looking at news and, you know, start looking at your positions as well. So there's a lot of preparation. It's not so simple that, you know, the moment the market starts, you come into the office, you open your laptop, you press your login screen, and that's it. You start trading. No, there's a lot of preparation involved. Yeah.
Yeah, so I mean, you still look at, of course, it's not purely, it cannot be gut feel, right? You are basically looking a lot of information, news, what's happening around, especially in the edible oil space as well, right?
Correct. Yeah, because you also don't be in a position where you're caught off guard. So you know you need to be aware what's going on with your surrounding. So when you before you start trading, you really need to know what is going on around your surrounding, and from there you position your trades or you position your wheel. So you know all this preparation work is actually needed. Yeah.
So what would your advice be? Because you have, I mean, you have been a proprietary trader. You are a proprietary trader now, right? For those who are interested to trade in commodities, especially, what do you think are the first steps that they should take before they come into trading commodities?
Okay. Yeah. So if you're someone new, like I said, you know, there's a lot of resources out there. Start looking at those resources. There's a lot of free resources that you can leverage and use. I think I shared some of the links. You know, go have a look at those links. So today I just shared on soybean as a particular product. You know, the first thing as a trader, a commodities trader, you need to know the supply demand dynamics. You at least need to know who are your biggest buyer, who are your biggest producer, how is the stock looking up. Are you having a high stock or having a low stock? So you need to be aware of all these fundamental dynamics. So in order for you to do that, you can look at some of the resources that's available on CME. You can have a look at that, you know, and start, be it open an account with CGS CMB, you know, then start your trading journey from then on and start small.
Yeah, so guys, if you are interested to know more about soybeans or any commodities or indices, you can actually contact CGS CIMB. We have actually pinned the contact number on our comment section, right? So just email them or contact them if you need more information. All right. David, are you still there?
Yep, I'm still here.
I can't see your picture, your photo, your video. Hold on. Okay, there's a few more questions. Other than supply, demand, production, and whether is the exchange rate affect soy versus palm difference as well?
Now, okay, I think this is a good question. It does, because if you look at it, soybean oil is quoted in US dollar and palm oil is quoted in ringgit. So the ringgit and US dollar relationship does have an impact on the spread. But I think what matter most in the spread is actually the relationship between both fundamental dynamics. So even though I think ringgit, USD ringgit has an impact, but it's actually quite not very significant in that sense. But it actually does have an impact at a certain point in time.
All right, we have another two more questions. I'm going to bring out another question is from Yvonne. How do you view the push for biodiesel mandate, and how impactful would this be to support prices? Again, palm oil related lah.
Yeah, I think majority of audience here are very interested in palm oil. Well, I think this biodiesel space is, I would say, is very point in contention, because you must understand we are now in a low price environment. We are not like those days where we have high price environment. You know, your crude oil is trading $60 or $70 per barrel. Now we are only looking at about $30 per barrel. So it's a very different environment you are in. So I think Indonesia is very aggressive, I would say. No, but then again, it always come back to ringgit and cents. If you have low crude oil price environment, how much can you push the biodiesel producer to really produce biodiesel? Because at the end of the day, it's not economical. And I don't think that will, you know, if it's not economical, I don't think producers will do it. And that will actually be less demand for palm. So no, really, we are now in a very low price environment, especially in crude oil environment. Biodiesel is not really in the scenario for now, but things can change. unless you are seeing a better price in the better crude oil prices, then probably we should see biodiesel demand to kick in, but not for now.
Right. Okay, we have one last question. I'm not sure whether you want to answer this question because it's now we go to stock related.
Okay. Yeah, I just have to put my disclaimer here as well. I'm purely a futures trader. I don't dabble in stocks, so I think I'm not in a position to comment on companies lah. Perhaps maybe Benny or any of you there perhaps maybe could be in a better position lah. But unfortunately, I couldn't comment much because I don't dabble in stocks.
Yeah, sure, no problem. Yeah, I mean, definitely prices of soybean and CPO prices will affect on the prices for plantation companies, right? But there are also other factors, right? Especially demand. So, and also supply, right? Because now, I mean, we all heard about COVID-19 and how production has also been affected, right? So again, it's how much they can sell. So, foreign exchange rate, even taxes, right? As you just mentioned earlier. So all of this will actually affect them. So not just purely price of palm oil and soybean alone. So that's why I can say I don't want to point out any companies, right? But definitely they will have, it's a sentiment thing, right? When prices go up, people will start to think that, probably plantation companies will do very well, right? Because they need to sell. If they sell higher price, the margin gets higher as well. It's as simple as that, right? So, okay, yeah. So thank you very much, David. It's really been a pleasure having you here. I hope that we can see you again. And
sure, yeah.
I want to thank CGS, CIMB, and also CME to make this happen as well. Right? And hope today you guys have insight about soybeans. And although you've been asking more about palm oil, but both of them are very highly correlated. So it's good to know, I think, the soybean market as well. Right. So thank you once again, David, for joining us, and we'll see you again.
Yeah, thank you. Take care.
All right, you too, man. All right, so good guys, thank you very much. We'll see you again tomorrow with next event. So have a good evening, and see you again. All right.